10 predictions for blockchain, crypto assets, DeFi, and NFTs for 2022. For the first time last year, the market capitalization of cryptocurrencies surpassed USD 3 trillion. It was less than USD 800 billion at the start of 2021. DeFi now has a total value locked TVL on Ethereum alone of USD $100 billion. However, NFTs have been the most surprising, accompanied by complementary sectors such as Metaverse and GameFi. Who can claim to have predicted those events? It is notoriously difficult to see into the future. Nonetheless, we're willing to offer projections for 2022. It will be interesting to see if they come true. Before we begin, welcome to Invested Knowledge. Knowledge is power, so make sure to subscribe to this channel for up-to-date essential knowledge to become more successful in life and in business. 1. Bitcoin price reaches USD 100,000 and the crypto asset market grows in breadth and depth. Inflationary pressures make scarce assets like Bitcoin's BTCs more appealing. Bitcoin is not just the oldest, most decentralized, and best-known cryptocurrency. Its restricted quantity of 21 million BTCs distinguishes it from other cryptocurrencies. Against the backdrop of Bitcoin's institutional adoption and the increased demand that comes with it, the BTC price is quite likely to soar to more over USD 100,000 this year. However, the whole crypto asset market will expand. Since the beginning of 2021, the USD prices of the top 20 cryptocurrencies listed on CoinMarketCap by market cap have risen by hundreds of percent. Many native cryptocurrencies from alternative Layer 1 blockchain protocols, Alt-L1s, are traded as potential Ethereum killers, such as Solana, Binance, Smart Chain, Cardano, Polkadot, and Avalanche, are listed among the top 20. Investing in the crypto asset market is, of course, riskier than traditional investment alternatives, owing to more price volatility. Furthermore, the growing number of wallet addresses, as assessed by monthly active users on the MetaMask wallet, 10 million active monthly users at the moment, indicates the demand for crypto investment options will continue. DeFi provides double-digit interest rates through liquidity provision, lending, and staking, whereas banks in wealthy countries frequently provide saving rates of less than 2%. 2. Ethereum undergoes upgrade and remains the dominant smart contract platform. This summer, Ethereum is scheduled to complete the switch to the proof-of-stake consensus method. Financial institutions from the TradeFi sector are also likely to enter the staking market. Staking payouts could thus become a form of prime rate of the crypto asset market. Given there are a few ways to invest in this market, they are less risky than ETH staking. Here, one has the option of setting up one's staking infrastructure or using staking services such as Coinbase or Blockdaemon. In terms of price development, ETH, like other Alt-L1 tokens, continues to have a lot of promise. Even though the proportion of protocols and tokens that are mapped to Ethereum-based DeFi and NFT is falling, Ethereum still has the highest transaction volume. 3. Crypto investments become more sustainable. ETP issuers, crypto exchanges, mining businesses, and financial institutions are all interested in providing their consumers with environmentally friendly products and services. Due to the reality of high carbon footprint of Bitcoin mining, many potential crypto investors have been hesitant to invest in Bitcoins yet. Interested companies are frequently subject to ESG laws that must be followed. There are, however, models that determine the required climate compensation for Bitcoin-based products for crypto investment providers. A recent study by the Frankfurt School Blockchain Center, for example, outlines how a Bitcoin transaction, in addition to holding Bitcoins, can be offset by purchasing emission allowances from the European Emissions Trading System, or ETS. To offset CO2 emissions in the earlier situation, USD 18 is required. In the latter instance, emissions allowances must be purchased for USD 100 if a Bitcoin is held for a year. It is reasonable to expect that CO2 emission prices will skyrocket in 2022. Overall, the energy mix used to power blockchain network operations is becoming more environmentally friendly. Not only have mining corporations left China following the government's crackdown on the country's mining industry, because of the cost structures that renewable energy sources, such as geothermal or solar energy, provide, mining businesses are increasingly turning to them. 4. Web3 infrastructure paves the way for the decentralization of the Internet. Web3 is a revolutionary method to potentially offer Internet architecture in a decentralized and autonomous manner through the use of blockchain technology. At its core, it's about reducing reliance on large, big tech networks and IT service providers, such as cloud or Internet providers, because they frequently handle collected data in an opaque manner, represent a single point of failure, and can operate a partially arbitrary product and pricing policy due to an oligopolistic market environment. Web3, on the other hand, is centered on the idea of restoring Internet users' sovereignty over data and infrastructure. From decentralized data storage via blockchains like Arweave and Filecoin, to decentralized wireless networks like the Helium network, tokenized platforms and projects where all decisions are made by the community, to completely new ways of identity management. Web3 provides a wide range of possibilities. Cryptocurrencies are especially important in this context because they can provide a long-term incentive system that encourages network users to provide the necessary infrastructure. 5. NFTs and blockchain-based gaming become a source of income. The Metaverse is a virtual marketplace where people can collaborate and trade. Without NFTs and blockchain-based infrastructure, these digital economies are difficult to envisage. The year 2021 saw a watershed moment in GameFi with the release of Axie Infinity and the Ronin sidechain, which enabled the throughput required to allow 1 million active players to participate in the Axie Infinity universe in August of 2021. Axie Infinity, invented by Sky Mavis, has been a source of income for many people, particularly in the Philippines. Microsoft and Facebook have announced their plans to create their approaches to digital worlds, dubbed metaverses. It is reasonable to expect that these internet behemoths will create a mainly centralized, partially closed system, making value transfers to other digital ecosystems more difficult, if not impossible. This, however, is opposed to the Web3 ideology, which emphasizes individuals with clearly defined property rights and freedoms of action through the use of blockchain technologies. The wait for the dawn of the multi-chain world is still intriguing. Once money transfers are smooth between different crypto universes, this might spark a fresh wave of adoption, boosting the NFT and blockchain-based gaming economies in particular. The employment sector in emerging economies may experience a fundamental change. Such as interconnected economy could be referred to as a metaverse. What appears to be a long way off could become a reality as soon as 2022, particularly in some areas of gaming. 6. The emergence of a multi-chain world. In 2021, the discussion over which smart contract-enabled blockchain ecosystem will triumph will gradually come to an end. According to popular belief, we shall live in a multi-chain future in which numerous blockchains can exchange information and value. As a result, the ratio of TVL on Ethereum to TVL on all blockchains will continuously drop. This figure was 90% a year ago. It is now only 62%. Nonetheless, it's expected that Bitcoin will continue to be the number one blockchain, and Ethereum will be the number 2 blockchain in 2022. Another significant development will be roll-ups, zero-knowledge and optimistic roll-ups, or Layer 2 protocols, which will compete with Layer 1 blockchains. They promise lower transaction fees and faster transactions while using the underlying base layer security. Furthermore, interoperability between multiple blockchain ecosystems is being worked on aggressively via bridges and cross-chain protocols. And last but not least, there are initiatives underway with Polkadot and the Cosmos Inter-Blockchain Communication Protocol, IBC, to construct a form of Layer 0, which is a network of multiple blockchains capable of connecting. What's fascinating and significant about these solutions is that they're all public blockchain solutions. closed blockchain infrastructures, which were expected to find application in an enterprise context only a few years ago, enterprise blockchains or permissioned blockchains, and were given significant importance, are now playing a lesser role. This mostly affects Hyperledger and R3 Corda platforms. Of course, apps will be developed on these access-restricted infrastructures. However, public blockchains have already won the race. Metrics like transaction throughput, transaction volume, market valuation, or mapped assets, and even developer activity might help access this. 7. More legal clarity through regulation and prohibitions. Many countries are anticipated to make a declaration about how they will treat crypto assets in 2022. Whether they will tighten restrictions and impose prohibitions as China has done, or whether they will take a crypto-friendly stance, as El Salvador did when it approved Bitcoin as an official currency alongside the US dollar in September of 2021. Authorities will concentrate on AML, KYC, taxation, and stablecoins, as well as the practicality of DeFi regulation in exchanges with regulators from other jurisdictions. It is also worth noting that the markets in crypto assets, MiCA law, will be implemented soon, providing a single regulatory framework at the European Union level and increasing legal clarity for service providers and issuers of crypto assets. As a result of this, it may be assumed that Europe and North America are on a fundamentally crypto-friendly path. Decentralized protocols such as Bitcoin and Ethereum will be accepted as long as standards such as money laundering prevention, transaction partner identification, and taxation are followed. 8. The digital euro will still not exist as a large-scale stablecoin. In theory, the digital euro could exist as a central bank digital currency, CBDC, a trigger solution, or a stablecoin. The European Central Bank, ECB, is not likely to release a CBDC until at least 2026. CBDCs are already legal in certain tiny nations, such as the Bahamas and Nigeria. As a trigger solution, the digital euro will be offered to the industry and financial sector this year for the first European commercial banks. However, the initiative of commercial banks is critical here because this form of digital euro does not require the ECB's involvement. In 2022, the digital euro in the form of a stablecoin will still exist solely as pilot projects. Significant volumes, as with U.S. stablecoins, are unlikely for euro stablecoins. The reasons for this are because stablecoins do not bear interest, and as a result, issuers would have to pay negative interest to the ECB. On the other hand, with the implementation of MiCA legislation, financial regulators are likely to pay special attention to stablecoins and impose stringent criteria. Given this backdrop, it is extremely likely that U.S. dollar stablecoins will continue to rise significantly. As a result, the dollarization of the crypto asset market will continue. 9. Adoption by institutional investors and large corporations is progressing. Over the last year, institutional investors and huge corporations have also expressed interest in digital assets. Hedge funds, asset managers, and family offices are examples, but so are pension funds or institutions like the Sparkasse or Raiffeisen Volksbank. Following above-average inflation rates, a continuously low interest rate environment, additional sectors of application, and the resulting surge in demand, prominent banks such as J.P. Morgan and Goldman Sachs are beginning to establish a range of solutions centered on crypto investments. MicroStrategy and Tesla, for example, retained billions of dollars in bitcoins to prevent the rise of the money supply, which has already resulted in relatively high inflation over the past year. In terms of large company adoption, Zuckerberg's Meta takes a step further by proclaiming itself one of the Metaverse's future main stakeholders. Furthermore, M&A activity will expand. PayPal, for example, has brought the firm Curve custody and IT security solution in the field of crypto assets, while Coinbase has acquired Unbound Security, custody technology and focus on cryptography. 10. DAOs open up a new way of social and economic coordination. Decentralized Autonomous Organizations, DAOs, are blockchain-based decentralized organizations that are collectively owned and managed by their members through token voting according to predefined criteria. These generate fascinating use cases, such as crowdfunding, social clubs, human resources, or group investment ventures. According to Consensus, the top 20 DAOs have USD 14 billion in their treasury, which is rising upward. Syndicate, Maker DAO, Climate DAO, and Constitution DAO are some examples of DAOs. Numerous new DAOs will arise in 2022. DAO building tools, in theory, allow anyone to create a DAO for any reason. DAOs will also scale largely if questions concerning the extent to which existing legislation affects DAOs and which jurisdictions they must answer in the event of a dispute can be answered. That's all for today's video. Thank you for watching. I hope all the shared information will be helpful for you all, and if you have any questions or doubts, please leave it in the comments section. Don't forget to like and turn the notification bell on for more informative content.